Hello, everybody, and welcome to Hash Rate. My guest today is Mike Grantis of Project Rubicon and General TAO Ventures. Hello, Mike.
How you doing? Mark, thanks for having me. Good to be here.
Good to see you. Good to see you. I'm used to seeing you in the movies.
You as well. Congratulations on your recent performance.
Yeah, so for those who don't know, we were both interviewed for a documentary called The Incentive Layer, and it's excellent. Not just because we're in it, but really the hero is not us. The hero is the director who basically took all of us crazy people and made a coherent narrative out of both us and Bittensor and TAO, which is in itself a very deep and hard to explain topic. So anyway, good to see you.
Shout out to Everett Scott, incredible director.
Everett, sorry, I didn't mention his name. Everett Scott. I did a fantastic job.
Yeah.
So yeah, if you haven't seen it and you're curious about what this whole thing's about, that's a really, really great resource. My only complaint, and it's not really a complaint, it's just if I were to do another documentary, or if Everett were to do one, my suggestion would be to do at least a segment, maybe even a whole documentary on what's going on inside the subnets, right? Mm-hmm. Mm-hmm. I mean, just look at ridges, right? Like, I mean, would you agree? Like, what subnets would you highlight in such a new film?
Oh, I mean, there's so many. I think for those that are new to Bittensor and just looking for something, like I get questions all the time from investors. Has any subnet hit product market fit, or when are these subnets going to turn on revenue? And my answer is always, in any technological revolution, the R&D comes first and the application comes second. I think the only product that might be different was the Apple iPhone, where the product, came first and then, the R&D into it came second. But in most cases in history, you build the underpinnings, and the first users are always the technical developers that can understand, read between the lines and actually read the code. And then the user-facing applications get built on top of it, and that's really the top of funnel for revenue. But there's so many already that have hit product market fit. My first answer is always Shoots. Doing roughly 40 billion tokens a day on OpenRouter, and
holy shit! And they're still number that they're providing the bulk of free model serving on OpenRouter too, right?
Yeah, I mean, I think they hit over 25 trillion tokens in total of inference generated on Shoots, and there's literally full subreddits of people asking, like, how do I get DeepSeek R1 for free? Why is this possible? Who's providing it? So if that's not product market fit, like, I don't know what is. Oh. But, you go down the list and there's so many that are kind of starting to reach state of the art in their own field. Ridges obviously being one of them for coding. You look at Score for computer vision.
Let's just stay on Ridges. For people who don't know, like Ridges is competing with Claude and Cursor, like, Anthropic's products, right? Anthropic's got $180 billion valuation and has spent billions making their product, right? Along comes Shaquille, right? And Ridges, and he basically uses Bittensor to whip up something which is scoring higher on the SWE benchmark test. And as of the last video I saw, it's going to cost the end user 1/70th, not 1/7, 1/70th of what everyone else is charging. So better and significantly less cost. Plus, I mean, I don't know how much he's thrown into it, his own personal money, but it's less than $1 million, I would guess.
Yep.
Right.
Versus the tens or hundreds of millions of dollars raised by, the likes of Cursor and Claude Code, billions, right? And, they're able to do this through, this new kind of model called pay for innovation, right? You're not paying every single developer that is building on your platform. You're only paying the innovators that make that existing model better. Right. And so Ridges was one of the subnets that really brought this new kind of incentive mechanism to light. I know a lot of others have followed suit. I think Bitmind is doing the same. I think Score is doing the same, and a few others. But I think that is the kind of way of the future is if you can have 20,000 developers all fighting for a winner-take-all scenario and you only have to pay the winners, think about the amount of competition, think about the amount of incentive you have to try and top those leaderboards, right? It's crazy. So there's so much happening in the Bittensor space. I think of a subnet like Synth that's probably doing the most state-of-the-art
holy shit. Yeah.
predictions of the future.
Let's talk about that. Let's stay there for just a second too, because like the numbers there are absolutely insane. So I've been watching their tweets, right? So Synth, what they do is they basically their subnet predicts the future price, sort of a probability cone. So it's not like an actual price, but it's like a probability cone of like it's somewhere in here. There's an 80% chance it's here, right? And then they use that to actually make a bet on Polymarket in the Bitcoin up or down hourly market, right? So they started actually making bets based on what was coming out of the Synth 50 subnet. I think it was 45 days ago, something like that. And they started with $3,000. And as of, I think this morning, they've made past $50,000. Oh my God.
Show me a better way to prove the viability of your product than throw your own money at it and show people how fast you can compound it. I mean,
they've more than 10x'd at this point.
In what is it? 3 weeks?
Yeah, 3 or 4 weeks. That's like they are Nostradamus, right? Like, so the question is like, can it scale? And I think it can. Like, if they bet more than $3,000, it would have been. I don't know how big the Polymarket market is, so there's probably some upper limit to that, but it's much larger. They could have gone much larger. And then the other question is if this all works if only you, Harry Seldon, are using psychohistory. But once like everybody's using psychohistory, do you start like bumping into each other and and does the future prediction cease to work? Almost like the Dune Tarot, right? And Dune Messiah, where the Dune Tarot was like everywhere to mess up Muad'Dib so we couldn't see the future anymore, right? So yeah,
that'll be interesting. I think Nostracanus is going to have a run for his money sooner rather than later.
Yes, absolutely.
Yeah.
So, what other subnets do you like at the moment, Mike?
There's tons. I think, and sorry, Victor, I'm not monopolizing the conversation right now, but I think Score is doing some incredible things, not just in Web3 but in the real world, showing that their product has utility for real sports organizations. I know they're in conversations with many more outside of the sports industry. Really turning any camera into an intelligent device seems like a product market fit to me. There's BitMind that's charting a course for the future of online digital
the world's best deepfake detection.
Exactly.
Like nobody's better than that. Like a lot of people don't know this. They are literally Earth's best deepfake detection, AI or not.
Yeah. And I get my parents asking all the time, well, how do you know that's real? Or like, they'll send me videos and they'll be like, do you think this is AI? And I literally just send them BitMind. Like, I download it. Like, it's as easy as hovering over it on the page.
So let's introduce Victor. Sorry, go ahead. So joining us a little bit late, but that's okay. Victor Teixeira, who's the CIO of, Project Rubicon, correct?
And General Top Ventures.
Hello, Victor. How you doing?
Hello, everybody. Apologies for being late. Friendly reminder, make sure you check all your tech before you come back from holiday, before you join a podcast, because that is exactly the moment that everything breaks just before. And apologies.
That's okay. It's all casual here. No worries.
Victor's just coming back from his honeymoon.
Oh, congratulations. Very nice.
You.
Well, I guess you have an excuse.
Landed a few hours ago and then turned on the computer and nothing worked. And I was like, okay, we got to like debug one by one. So totally lost track of time.
Made sure we booked this as soon as he got back from his honeymoon, so we knew work started right away.
Okay, well, let's get into Project Rubicon now, because we just talked about a lot of these like insanely great subnets, right? So, but the market caps for these subnets are criminally low, like absurdly low compared to their real world or non-TAO counterparts. And honestly, I think there's two reasons for this. One is a lot of the sort of crypto Twitter crowd is, they understand Bitcoin and they understand meme coins. But the stuff we're doing is super serious, right? Which I think is eventually very good, but I think it is initially it's too much for a lot of these folks out there to absorb. They don't understand the subtleties of why Ridges is so much better than Claude and Cursor, right? They won't understand until all of a sudden Ridges will zoom up to like several $1 billion in valuation out of nowhere one day. I think it's not financial advice, but that is what I think. And all of a sudden, then everyone, they still won't totally understand it, but they'll realize that there's something important happening here. So that the education and sort of proof of crossing the chasm is sort of step one. But the other half of it is that in order to get subnet tokens, you have to stake TAO natively using a native TAO wallet on the TAO chain natively. And that's how you get subnet tokens. That's not really easy for a lot of people because they're used to their Ethereum or their Solana or whatever the F, right? So you guys have decided to cook up a solution to this. So why don't you tell us about that solution?
Project Rubicon. Yeah. Well, Victor, let me kind of set the stage and I'll let you go into actually, technically how it's done. But I think you make a good point that if you think about the total universe of people that have ever touched a digital asset, most of them have only either touched Bitcoin or stablecoins, right? And then there's a smaller subset that have even played in anything like Ethereum or Solana, and probably a smaller subset even than that have ever touched a layer 2 or any other crypto assets. And then there's Bittensor, right? Which is even one step removed from the general Web3 ecosystem, and it's kind of like it's on this island on its own. And there have been bridges that have essentially attempted to take liquidity from where it lives and bring it into the world of Bittensor. Like they're sending ships from mainland to the Bittensor island. And I think what we saw is that is a difficult ask to get people from mainland, let's call it Web3 land, to download a new wallet, to figure out what this new architecture is, to understand what a subnet is and how to invest in it, and then to kind of get them to bridge their liquidity into this new ecosystem. The easier way is to take the subnets and put them on their own boats and make the bridge to mainland where the liquidity lives, right? And so that's what we wanted to do with Project Rubicon, is create this connective tissue for subnet owners, so they're not isolated to their own island, but to be able to bring them to where the liquidity is on mainland, which the first protocol that we've partnered with is Base, to start bringing liquidity to the Base ecosystem where we know it lives. And it's also where a lot of the institutional capital lives, because obviously Base is developed by Coinbase. And so there's a level of trust and security there. So that's really the idea behind Rubicon. But Victor, I'll let you go into more detail.
Yeah, so just to kind of dovetail off of what Mike said, I think there are three things are true right now. I think Bittensor is probably at its highest mind share that it's ever been. I think that access to alpha tokens is still difficult. I think that, exactly to your point, transferring over into TAO, learning the wallets, learning the whole ecosystem and kind of learning from scratch is hard for your average retail user that maybe only just figured out EVM probably 2020 to 2023 maybe, and then kind of fell into meme coins over the last couple of years. So this is still something that's quite different. And then I think the third part that people don't talk about enough is that the tokenomics are very difficult for people to build a mental model on, especially around the yield. I think is when people just look at a price chart for 15-minute price chart on any given subnet token, you'll just normally see a chart that's kind of going down and to the right. Right. And that's simply just because you have the emissions, you have the root selling proportions. So that's not really a drop in the price. It's actually just a drop in the unit price, but the market cap may have stayed steady or gone up, but the unit price went down. And so to cover that, we kind of came up with a solution that covers all three of those issues. The first one is that we've built a liquid stake token within the Bittensor ecosystem that essentially wraps that yield into a single ERC20 token. So rather than you having to worry about, okay, I bought 1,000 alpha, but my wallet says 1,200 alpha today. How did that happen? Okay, it's good. I got more alpha, but then like you as an average retail user, that's not normally the experience that you're experiencing on EVM or on Solana, right? So this ERC20 token is a single ERC20 token that sits in your wallet, but that ERC20 token continuously accrues yield as the root stake emits into it. So that you essentially come in, let's say with 1,000 alpha, you mint what we're calling X alpha against that. That X alpha goes into your wallet. That's an ERC20 token. And then as the yield comes in, let's say it goes up to 1,100 alpha, including an extra 100 of yield. That exchange rate now for your 1,000 X alpha in your wallet is now 1.1 rather than 1-to-1. So when you redeem that, you get 1,100 back.
Wow. I was going to ask about the yield. My guess was that you guys were just ignoring it.
No,
as far as I
all.
know, everybody else largely, I mean, there's one other solution that's not, but just in terms of the wrap tokens, as far as I know, the other sort of wrap token attempts don't include the yield. They just go, man, fuck it. It's too hard. So you guys actually have wrapped yield. That's amazing. And so for a lot of people, who don't understand part of what you just said there, you're correct that a lot of times when you look at the top subnets, the market cap is largely the same or might have even gone up, but the price of the token has gone down. However, there's mad yield that those tokens are throwing off, sometimes like 80%, right? So you're actually making that, you're not losing money. You're not bleeding like you think you're bleeding when you see a chart go down like that, because you're getting additional tokens put on top of it. Quite a bit, actually, up until the halvening. It'll calm down a little bit after the halvening, but for right now, it's actually quite extreme in some cases. So you have basically built something which takes the subnet tokens and bridges them over to Base. So now I can go over to Base. And so the idea is that mere mortal meme coin normal people in the normal world with a Base wallet, and Coinbase, is sort of their primary centralized exchange, probably. That's how their fiat's getting in and out. They can now just use the assets they already have on the chain they're already used to purchase subnet tokens. And when you purchase a subnet token, it's not necessarily sort of one-to-one with the subnet tokens that are in the native Bittensor universe. You get wrapped yield inside of the tokens that you're buying. Yes?
Exactly.
Yeah. And I think to make that point just a little clearer, like you can just go in with USDC and you can buy alpha tokens, right?
Yeah.
Makes it really easy. You'll be able to see the price charts look a little bit different than they would in Bittensor, because you'll have not only just the unit price, but also the alpha tied in, or the alpha yield tied in with that. I think one of the barriers to entry for Bittensor has been it's very difficult to show the APY, because APY could be different for every validator that you might use, right? And so we haven't done a good job of really putting front and center, hey, some of these alpha tokens are doing 80 to 100% APY. Most people don't realize that, and so they just see the price chart and make their decisions based off that. But if you have a price chart that's inclusive of both APY and the alpha, then it looks a little bit more palatable to an average user, right?
Yes, that makes perfect sense.
Yeah.
Huh. Okay, and then what are you using for the bridge solution? Are you guys using Chainlink under the hood to sort of make the? Okay, yeah. So in the past, just to set the stage here, in the past in DeFi, the DeFi wonderland that we all lived in for 2 or 3 years, it was really great in a lot of ways, but it was also really terrible because a lot of protocols got hacked and drained, and the primary way to hack and drain is through a bridge, right? Because the tokens don't really move from one chain to another. Like, that can't happen. That's not real. What you can do is sort of lock tokens over here and then mint new ones over here, which represent the locked ones over here. But if some bad person is like, hey, look at this big pile of locked up tokens, if they get in there and they take them all away from you, now these tokens are worthless because they're not backed by anything anymore. That happened a lot. And so along came Chainlink, and they said, all right, we're going to solve this freaking problem. It's never going to happen again. And they came up with CCIP, cross-chain something protocol. Interoperability protocol, thank you. And so far, that's never been hacked. And I think everyone largely agrees that. Tell us a little bit about the safety of that protocol and why you're confident that it won't be hacked.
Yeah, look, Chainlink CCIP is industry standard. It is trusted not just by the Web3 industry, but by every large institution for the most part in the world, right? They are trusted by the Swift ecosystem. JP Morgan, Citibank, Deutsche Bank, Visa, MasterCard, I believe, use it. All the largest institutions in the world use CCIP. So it is very much industry standard. And you're absolutely right. Like bridges can be massive honeypots if they use the wrong underlying infrastructure. And I think it's very important, if you have any queries or if you have any qualms using bridging infrastructure, look at what it is built on, because that is by far the most important. To have the trust of a partner like Chainlink CCIP and to actually build and integrate this with CCIP was, I think, a major step forward for the Bittensor ecosystem in general. Typically, CCIP has, a six-figure chain integration fee. They actually waived that to work with us to build this bridge. I think they're very bullish on the Bittensor ecosystem. Bittensor has an ethos of not paying for listing fees, just like Bitcoin, right? Yeah. And so I think that was their nod to us as, hey, we believe in the ecosystem. We're long-term supporters, and we want to build with a trusted team. And so I think, one, hats off to Chainlink and the CCIP team for being great partners on this, for opening up the floodgates to this new ecosystem. And I think, also I'd like to shout out the base team. They've been great as kind of first integration partners. I think when we're looking to move from one chain to another, you want to have this first port of entry, right? You got to have a beachhead in which all of the liquidity goes to a single chain. There are others that are trying to kind of open up liquidity to all chains at the same time. Yeah. That's going to fragment liquidity. You're going to have extremely low liquidity pools, and people are going to get absolutely wrecked on slippage. Have a beachhead, have one chain that you can integrate to first, and then we can talk about using CCIP to bridge to other chains once the liquidity is provisioned properly on the first chain. I think that's also another differentiating, go-to-market strategy that we've taken versus others.
Yeah, I've seen that. You're absolutely right. And that is actually it's my major complaint, actually, with, I'm not going to name names because I never name the other people while I'm doing one of these shows, but there are the people doing something. It's not exactly what you're doing, but they are spread out amongst multiple chains, and the liquidity. So basically, in a decentralized exchange, you need, it's not enough just to make your cool new bridge token. You have to make the other token that trades against that. And you have to have enough of it in a pool, and that has to be supplied by the people because it's a decentralized exchange. So you have to incentivize that liquidity to come in. And these other folks, there's like maybe $1,000 here and there per coin, right? So you can't you just can't buy $5,000 worth, right? Like, it doesn't exist, unless you want to pay $5,000 for whatever's there, right? It's just, you can't get it. So, so I think that. So nobody's really cracked this yet. So I'm hopeful. So how are you taking care of the liquidity issue? Are you providing it yourself? Is somebody else providing it? How does that get dealt with?
So on that, we're partnering directly with the Subnet teams. And at the end of the day, who's got a giant pile of alpha that is not being utilized right now? It's Subnet owners, right? You can't sell it. It hurts your kind of your price. That is a whole bunch of assets that doesn't really have any utility or revenue streams that are coming off of it. And so we've partnered, I believe it's with 16 Subnet teams now that we've crossed the Rubicon. And exactly to your point, we've gotten these Subnet owners to come in, provide the initial liquidity on their pools. And if you want to buy $5,000 worth of shoots today, you can. It's there. So
the other thing I would say is, so we launched with kind of what we would call the inaugural cohort, 16 of the top 20 subnets. But that doesn't mean that we're precluding any of the other subnets from joining. I think what we wanted to do is we wanted to have a phased approach. We wanted subnets that we knew could offer enough liquidity to make the liquidity pools on both sides, both USDC and their own tokens. And so we went just to the top teams in the ecosystem. The response was overwhelmingly, yeah, let's do it. Like, this is a great idea. Yeah. But since then, I've had a number of DMs and outreaches of other teams that have wanted to, quote unquote, cross the Rubicon. And we're absolutely open to that. We wanted to just do it in a phased approach to make sure that we could get everybody set up properly, make sure that the liquidity pools are set up. We wanted to kind of hold people's hand in the initial term and setting up these liquidity pools, and just making sure that the user experience from their side was proper. But look, we're going to be rolling this out, and the goal is to have 128 subnets cross the Rubicon. But as with any good product rollout, you do it in phases, and you make sure that everything's done right at each phase.
Yeah, I totally applaud the crossing the chasm strategy. It's absolutely the right way to go. Both you're narrowing your focus in terms of the chain, but also in terms of the actual subnets that you are crossing the Rubicon on. Now, my question is when you cross the Rubicon, do you invade Coinbase? Is that where it ultimately? No, I'm just kidding. So, funny by that whole Caesar shit. Sorry, a little aside here, but what cracks me up about that, if you actually know the story, right? When Caesar crossed the Rubicon, the Senate had been threatening him, saying you were invading Gaul without our permission. Fuck you. You're gonna get arrested, right? And so Caesar's like, okay, fine, I'm gonna cross the Rubicon with my army, and then the Senate just fucking leaves. The entire Senate leaves Rome. And they go on the run.
Yeah. And what did he say when he crossed the Rubicon? The die is cast.
The die is cast. I don't know if he said that or Shakespeare made him say that, but yeah, it's rumored that he said that, but I'm not quite sure where that came from. I just love the idea of the Senate shooting its mouth off, and then as soon as Caesar shows up, they all run. All these guys in togas run. Yeah. Right. Which is how Pompey ended up in Egypt, and that's how Caesar ended up in Egypt because he chased Pompey down there, right? So yeah.
You know your history.
Right.
Love it.
Yeah, no, I'm a history buff. So anyway, back to reality. So you guys. Oh, I have a question. So what? First of all, you guys, with your 16 subnet tokens, I noticed that you don't actually say the name of the token. You just say subnet 44 or whatever, right? You don't say score. Why is that? And wouldn't it be easier if you'd simply labeled them by the names that they're existing? Or are you sort of thinking, what happens if they get deregistered? And tell me what is the reason for that naming convention?
It's exactly that. It's at the end of the day, in Bittensor, just given the nature of how it works, is that you're owning a slot in the network. And so we decided to really go after that naming convention. But really one of the kind of the inspirations for that naming convention is the Asian stock markets, where the stock listings are not tickers. They're actually the number of the slot on the stock exchange. Oh. And so we kind of decided, look, if that's good enough for Asian markets, and that's been the case in Tokyo for a number of years now, this is good enough for Bittensor. And really it kind of replicates the intent of the system, where there is this ability for different parties to roll in and roll out. And I think, obviously, I think from a broader standpoint, the top subnets probably are going to be the right ones. So for example, a Score, a Bitmind, we won't worry about their name changing. But if we are to take a subnet, for example, an emerging subnet, not to name any names or kind of put anybody in any boxes, but any emerging subnet that perhaps has had an ownership, or even, for example, Subnet 35, one of ours, which was previously LogicNet and is now 0x Markets or Cartha, that it really becomes a bit tricky to have that name and then do that update on the ongoing basis. And so that was really why we decided to do that naming convention of the slot. But at the end of the day, I think everybody kind of knows subnets by their numbers. A lot of people coming into Bittensor, yes, they might have heard the name or other parts, but often after they hear the name, the second thing people send is the subnet number. And so that really kind of also works as a little bit of a bridgehead into people's mind and kicks off that kind of imaginary eye of, okay, subnet 35. All right, I got this kind of vibe for it. Now let me get into the Bittensor world and kind of understand what is a subnet number and kind of go through that.
Yeah, people do tend to, or if you've been in this world for long enough, you just tend to refer to things by their subnet number. Mm-hmm. You're like, oh, that's 3. Look, that's Sam, that's Templar, right? You just know these things off the 44, that's Score, right? You just know. And yeah, so that does happen a lot. So what happens if a subnet is deregistered?
Yeah, so in the current mechanism, as long as the alpha tokens continue to exist, if there's no redemption on them, that's continues. So for example, if it's not a deregistration outright, it's more of just kind of a transfer of a sale or a secondary trade.
Yep. Token
continues. If there is a deregistration, obviously the TAO will go into the smart contract address, and we haven't really talked about the architecture, or maybe it's a good aside to kind of go into the architecture of how we've structured this.
Sure.
And fundamentally, the way that we want to do this is that we wanted to build it entirely within Bittensor. So all the tooling here is Bittensor native. And so the way that it works is that Bittensor has the Subtensor EVM, which is an EVM palette on top of the substrate. And what that means is that it's really just Ethereum virtual machine kind of like masquerading on top of Substrate. So it can translate all the terms of EVM into Substrate and then run the actual trades on the Substrate side. And then also have the smart contracts dictating where that goes. But what that means is that every EVM address has a deterministic SS58 address on Substrate. And so does every smart contract. Now, every smart contract has an address on Substrate, so Bittensor, Finny, Mainnet, that is now only controlled by the smart contract. That address doesn't have a private key. So that now means that smart contract controls that Substrate address entirely. So you as a user can now send alpha or TAO into that address, and then the smart contract is able to mint the ERC20 token against it, but only smart contract controls that. And then the really cool thing is that the actual exchange rate is calculated in a completely Oracle-free way because the EVM palette, and sometimes for EVM, allows you to look through to Substrate and tell you what the balance is on that address.
Ah, yeah, it's very nice.
So
yeah, you just go ask it.
You just ask it. You say, what's the balance in the wallet?
Yeah. Yeah. There's no third party looking at. Yeah, totally cool.
Exactly. Okay. So Bittensor native, top to bottom, right? So what that means now is depending on whatever mechanisms there are, and obviously there are parts that we haven't seen a real deregistration event for significant amount yet. I think we're still
we haven't
on the edges there. So we are now at a point where when that happens, we have the ability to essentially take on the tokens or the TAO in the Substrate address, and then we can create a redemption system or kind of decide how we want to treat it. But that was also part of the reason of why we wanted to go with the top 20 subnets for this first go, was really to kind of put that decision down the line. And obviously in Bittensor, we love to test and prod, but this was the one thing that I think we wanted to kind of see how it plays out first on mainnet before we kind of implement this into Rubicon.
No, I think it's a completely fair answer to that question, and it was pretty much what I expected. So yeah, I think it's completely fine.
But we can redeem the token. So at the end of the day, if it just swaps out for TAO and all the alpha goes away and you just get TAO in return, we can redeem for TAO. So that's not an issue.
Very cool. What about all this stuff, because it's on base, I can see it on Deck Screener, I assume, right? So because I think that's been a big complaint. I think part of the invisibility of the Bittensor universe is people are used to things like Deck Screener, like, where is it? So they go look for it on Deck Screener and it's not there. Ridges, and like nothing pops up, and they're like, oh, it's not real. It must be bullshit, right? Like in their mind anyway. So I like the fact that now there's something where, it'll start popping. These things will start popping. Subnets will start popping up on Deck Screener in the universe that these people are used to. How will you market? Do you guys have a marketing plan for marketing this when it's sort of, when you're happy that it's running the way you hope?
Yeah, I mean, we have marketing plans both with Chainlink and with Base. Actually have a Spaces coming up with both them and some of the leading subnet teams that have crossed the Rubicon. I think we have given we were venture capitalists in the Web3 space prior, we have a lot of great relationships with both VCs and influencers in the traditional Web3 space. And so we've tapped on a number of them that have shown real interest in the project and kind of helping it find its feet in the Web3 space. The other thing I would say is, like, look, the original go-to-market was to get subnet teams to put their alpha in to bridge the liquidity, right? They're the ones that have the largest alpha, so it makes sense to go to the subnet teams. That's not to say that only a subnet owner can bridge their own alpha. If you are a big bag holder, I know Stillcore is going to be holding some bags, and I know DSV and unsupervised and all the others. If they have large positions and they would like to earn LP fees on those positions as well as their yield, they can also go in. Actually, any user can go in and just add liquidity, right? So it's not to say that only the subnet teams can be the liquidity providers. Anybody that's looking to get access to this, larger swath of liquidity for trading can also bridge liquidity. And so we want to just make it clear that even though subnet teams were the first go to market, anybody can now go to those token addresses, add liquidity to the pools, and go, do the promotion themselves on Base and be the kind of hands and feet that bring this forward.
And if I can add one point to that, just from if you are yield focused as a holder, you want to get the most yield possible. What you're getting here is that not only are you getting your APY for your alpha tokens, because that's wrapped into the token that you're holding, but now you're actually earning yield on top of the wrap token.
Yes.
And so you're really maximizing your yield on this. And this is really the biggest yield generating opportunity in Bittensor is now in Rubicon.
That's amazing.
And let me just mention, like, this is really kind of a foundational building block, right? I think Victor says it best, but no ecosystem can succeed without DeFi. You need to have traders, you need to have liquidity makers, you need to have applications in which people can take long short positions or build, perps on top of, or whatever it might be. That is that's what fosters a thriving ecosystem. And so what we're doing here is we're giving people a foundational primitive that is a building block that they can go build on top of. So if you want to build, an options pool, or if you want to build any type of derivative product on top of X Alpha, you can go do that, right? So this opens up kind of not just liquidity on new chains, but it opens up kind of a world of possibilities in what you can actually build on Bittensor, but in other chains, right?
Holy shit.
Yeah.
Perp stacks, Subnet perp decks coming up.
High risk, high reward.
I don't know if I love that or not, but I do agree it should exist, and I do agree with Victor that you must have DeFi inside of this universe.
Well, I think even more to that, like before we even get to perp dexes, like we need lending, right? At the end of the day, like fundamentally, Bittensor pre-TAO, you're getting rewards in TAO. And that could be translated into CapEx if you're a subnet owner, right? To build up your subnet, expand the team, get more people in the door, and just scale that up, right? Post-TAO, the initial price mechanism, and even TAO flow to an extent, doesn't allow for you to sell down your alpha tokens without punishing you on the back end, which means that you just aren't able to get that CapEx in. And a lot of Bittensor originally, even though we are VCs, a lot of that Bittensor kind of ethos is anti-VC, right? So it's not the easiest network to kind of get that venture capital in the door. So fundraising isn't always an option for everybody. And so the idea here is that, at least in terms of the first kind of port of call that we really want to build that building block, is deposit your alpha and borrow against it. And to kick that off, though, what you already need to have for a effective lending market is you need to have trading volume so that you can liquidate those assets if somebody falls underneath the collateralization ratio. And so that was the first step of the project, to really build those pools and get that liquidity across the Rubicon in that way. But now, we have to make our way down to Rome. Then we have to make our way down to Taranto and chase Pompey across the seas. So, each step kind of adds that element where it really builds up and transforms us from the Republic to the Empire, and really allows us to expand beyond just Bittensor and into the rest of the Web3 ecosystem.
Wow, nice working in of Roman history there too. I appreciate that. So, so how much liquidity are we talking about right now? I mean, I know this thing has just started up, but how much liquidity is in the Ridges pool right now, ish?
I think so. Forgive me, I don't have the individual pools up, and that's literally because I've just come back for a holiday, so I haven't checked the dashboard yet.
Busy.
But I will tell you that we're about 1.5K TAO TVL on the Rubicon side. Yep. And then each subnet team has kind of structured their pools differently. Some of them are V3 pools, some of them are V2 pools, some of them, obviously V3 pools don't need to be 50-50. V2 pools are. So I can't tell you the exact number across the whole board, but in terms of what's on the Rubicon side, last I checked earlier today was 1.5K TVL, thereabouts.
It's about 500K roughly.
Yeah.
500K.
Yeah. Okay. So that's respectable.
Yeah, we launched last week.
Yeah, no criticism. I'm really happy this exists. I've been hoping for this to come sooner, and I've seen the attempts not really totally work just yet. And so I've been very, when you Mike, when you told me about this, I was like, okay, this is, thank God. We definitely need this, and so thank you both for supplying it. And I think it's a really good thesis. The way you've built it, I think, is very smart. And I think one of the things, there's another solution out there that actually does do everything on the Bittensor native side. And there's a lot of things I like about that solution because it uses the native liquidity. It doesn't have to go build up liquidity on another chain because it just uses what's already on the Bittensor native chain. But the thing that's weird about it is when you use your MetaMask wallet to purchase things on, the subnet tokens, you get them, but you don't really get them because you're really using a remote controlled Bittensor native wallet that's generated using the key supplied by your MetaMask wallet. And so when you go look for those tokens in your MetaMask wallet, you're like, wait, where are they? I just bought them. How come I don't see them in there? Where'd they go? Right. And that's like the moment of panic, like that will set in because people are so, everybody, any token you ever buy, like you see it in your wallet. Right. And this is like super, like this solution, although it's clever in some ways, I think that piece of it is very not good. You buy something at the store and all of a sudden it vanishes from your cart. It's literally the opposite thing you expect, right? So I think it's a significant UI issue. So, and you don't have that. So
and let me just say, like those types of integrations and making things very user friendly for the end user, those also do, they take time and work from the actual development team to go make sure that those API calls are being called, or to make sure it's properly listed on CoinGecko, or make sure it's properly the pools properly show up on Aerodrome or whatever it might be. And so that's work that we're taking on our side. And really, the way that we look at this is really as a collective of subnets, right? So we want to help shepherd Bittensor to the rest of the world, the quote unquote world, and bring Bittensor as a whole package, as opposed to a one-off solution, right? There are lots of subnets that have looked to launch on centralized exchanges, and yes, there's liquidity on centralized exchanges. Sometimes there's listing fees, and those listing fees typically get sold down by the exchanges. And so you have a lot more collective bargaining power if you come as a total group of Bittensor subnets, as a legion of subnets, than if you go individually. And even if you want to go individually, if you're part of the legion and you can show, hey, I've got X amount of trading volume, I'm already listed on the Base app. You can buy it from your Coinbase wallet. Why do I need you guys? Then the negotiating power flips, and actually you hold the cards versus the centralized exchange holding the cards. So what we're trying to foster here is we're trying to foster this legion of subnets to cross the Rubicon into the rest of the Web3 ecosystem, where we can have collective bargaining power as Bittensor as a whole, as opposed to, subnet by subnet trying to get listed on all these different exchanges and probably having to pay, an arm and a leg to do so.
And I think to that point, that's the power of Bittensor, right? I think we've already started talking about subnets mining each other. We keep talking about building more interoperability within the ecosystem in of itself. And I think using that power in terms of the mind share, a lot of people know about Bittensor, but they may not know about shoots specifically, or they may not know about ridges. They haven't gotten to that point there. And so this is really an opportunity for us to push Bittensor. And just by pushing Bittensor, you inadvertently push all the alpha tokens, right? Because when people talk about what's built on Bittensor, well, then that's when we start talking about a Synth or Subnet 35 or what have you. We really break. That's the first point, is we're interested in Bittensor, and then the rest of it comes from there.
Yeah, and I think also the other strength to your approach versus that other one I was talking about is because the tokens are actually on the native base chain. You can actually do lending. You can actually do perp dexes, for better or worse. But let's just assume we definitely do want DeFi occurring. That other approach, the tokens are trapped inside the native TAO chain. You can't put them on all these other things which have already been developed on base, like all the dexes that already exist, all the perp dexes that already exist, all the lending protocols that already exist. They can't participate because they're look at that, they're marooned over there, right? So you actually unmaroon them crossing the Rubicon into this new universe where there's all this cities and roads and things already built. So that's extremely powerful.
You make a really good point. There's been a decade worth of innovation, hundreds of millions of dollars spent building up infrastructure, like building up a city, right?
Yeah.
In the world of EVM. And we came around, we saw a better way. We built a new city in Bittensor, but that city is still very small. And, there is value to relying on a bigger city in some respect for the infrastructure that they've already built. So if we have this new great solution, we don't have to live in isolation.
And it shouldn't be over there anyway. Like I don't want fucking cascading liquidations happening, while Ridges is trying to mine, right? Like you don't want those things on the same chain.
Yeah, like I understand operationally, like why Substrate it makes sense for Bittensor, but I think there's so much that can be utilized with existing infrastructure that's already been built in EVM, that why spend all that money building it again when you can just cross the chasm and use it yourselves?
And I think to that point is we built this bottom up, right? A lot of the other solutions have built this top down. We built this bottom up. So all the core pieces are Bittensor native. So really the difference here is rather than kind of you having a transport system where you're going from by helicopter where you're getting airdropped on top of each building, we've built the subway system where now when you walk out of that subway, you've got the shops, you've got the street, you can walk there, you can benefit from all the other infrastructure that is available. But at the end of the day, the fundamentals are still Bittensor, even if you're on base.
Yeah, it's amazing you've even preserved the yield, which I didn't expect. I got to be honest, because I thought that was just too hard. So I thank you for that, because I mean that could be like a 2x, right? Sure. Or preventing a 1/2 of your bags, right? By using one of the other solutions, you actually preserve the full wealth of anyone who uses your subnet tokens. That's great. Okay. Well, look, we're coming up on the hour here, so let's talk about your other party tricks, because I know you got a couple, right? Let's talk about, I guess, Cartha. Can you tell us a little bit about what Cartha is and where it's at and what's going on with it?
Yeah, so Cartha is a PERP FX DEX. So it is specifically built to compete against contracts for difference, the CFD market and the FX world, where what we're doing is we're leveraging Bittensor to orchestrate liquidity and trading activity so that we can actually go out and have the the supply side of the liquidity, and then match that with the demand side of people wanting to trade FX and currencies, commodities, and certain cryptos as well.
So FX is foreign exchange for those who don't know, right? So when I trade my dollars for yen or whatever, right? Like there's a whole world of changing currencies, and it's very sort of it doesn't move around a lot. So typically people make leverage. If you want to make money in that world, you have to take out hyper leverage, right? Like it's just because the motions are so tiny little things, right? For the most part, unless you have a disaster going on, in which case we're all being hunted by apes on horseback, and we have a different set of problems. But barring that, it's very little motions, right? So basically, leverage is the only way to sort of make any money. But also, I'm told that like a lot of the foreign exchange markets are kind of shady and shitty, even though it's like enormous. It's about, I think it's like 40 times, something like 40 times as large as all of crypto or something like that.
There's something like $7 trillion traded daily
every day
in forex in the derivatives markets, right?
Yes, it's 19x. It's 19x crypto. That was the number. That's the exact number.
Yeah.
Wow.
And I think there's many that have tried foreign exchange markets in the Web3 space. I think one of the difficult things is liquidity is mercenary, right? Liquidity tends to go where it's best treated. And sometimes that means it moves from centralized exchange to centralized exchange or even decentralized exchanges and just bounces from one place to another looking for yield. Whereas we saw an opportunity with Bittensor where we can actually incentivize long-term liquidity, right? Typically the way to do that is you have an airdrop or you give people high yield up front to get traders to join and start trading. Whereas we can actually programmatically do that through our subnet, Cartha, Subnet 35, is incentivize miners to lock up as much USDC as they can for as long as they can. The higher your quantum and the longer you lock up for, the better you do as a miner. And so we thought Bittensor was the best way to incentivize that long-term liquidity to actually build a sustainable product that can, be here into the future. And on top of that, add all those transparency features that you just mentioned, right?
Yeah. So to summarize, to achieve heft, because you're in the heftiest market in the world, foreign exchange, 19x all of crypto, 7 trillion a day in trading. You have to be able to provide leverage, which means you need a fuck ton of liquidity. Right, that means a lot of USDC, because I think the only way I can supply liquidity to Cartha is USDC, correct? And then you construct, I think, synthetic positions out of that effectively, if I understood it correctly. So yes, okay. And you want that USDC to stay with Cartha. You don't want it moving around. which is the typical behavior of liquidity, right? It's like, oh, like there's a better deal over there. I'm going to run over the fence there. Oh, today it's over. I'm going to run back, right? Like it moves around a lot. So you're like, no moving. Just look, stay here. But we're going to pay you. We're going to pay you to sit, and we're going to pay you, or the chain is going to pay you. The Bittensor the Subnet 35 Subnet tokens are going to reward you for long-term lockups of liquidity inside of Cartha. We want that. We need that. So we're going to pay in Subnet tokens, or the chain's going to pay you, because that is how the incentivization alignment engine works, as we described it, the incentive layer. So yes, so this would be that incentive layer in action. Now, if somebody wants to buy, somebody hears this and goes, "Oh my God, this Subnet sounds amazing," you can go buy Subnet 35 tokens on Base right now, right? I can do that. Right? Where would I go? How would I get my Subnet 35 tokens on Base with my USDC on Base right now?
You'd go to Airdrome, you'd look up XSN35, and you'd be able to buy it. The easiest way to find it is if you go to rubiconbridge.io, click on buy underneath Subnet 35. If you scroll to the bottom, there'll be a set of pools. Click on buy there. That'll take you into the Airdrome pool page, and you'll be able to make the trade there.
Oh, I wasn't aware. You guys have your. Sorry.
Or you could click the link in the show notes.
Yes, I will put a link in the show notes. So no, I will. I mean, I think people should see this, right? Because a lot of people don't know how easy this has now become, right? Yeah. I think we just explained why they should buy it, and now and if it's that easy and they can just use their MetaMask wallet, I think you'll have some people who will be interested in that. So yeah, and I actually wasn't aware you actually have all these subnets up at what was the website again? Rubicon?
Rubiconbridge.io.
Rubiconbridge.io. So that's like that's the UI that's my gateway to all of my base-based subnet tokens. All right.
And I'll also make the caveat, look, Rubiconbridge.io, this is a V0. This is our kind of earliest product. We will be innovating on this, obviously. And, as with any product, it gets better and smoother and faster with time. And so we're really excited to have onboarded the subnet teams to add the liquidity, to make it easy to come to Base. And, the product's just going to keep getting better, faster, smoother. So keep checking in, and it'll keep getting better.
Yeah, this is pretty awesome. Well, thank you, gentlemen, for being here. Is there anything else I should have asked I didn't that you want to plug? Anything you want to plug? This is the time.
Last thing I'll plug is if you do want to buy $5,000 worth of SN35, you can do that. It won't cost you too much slippage. It is possible. The liquidity is available. So I will throw that out there at the time of this recording.
Very nice. Okay.
I would also like to say, Mark, I love your background. I feel like it keeps evolving, and I know you've got all your passes from all the different conferences, and I would just like to say I really appreciate what you do.
Well, thank you, man. I like having an interesting background, and you're right; it has evolved. Yeah. We got the still core thing up. I wanted to obviously have that in every show, but that meant like it was all off balance, so I had to put some other things up. So, and it occurred to me I don't actually have the Bitcoin books up, so I was like, I should probably put those up. This is another documentary I was in previously, blockchain documentary, directed by Alex Winter. So if you know Bill and Ted's Excellent Adventure, he's Bill. So he was the director on this one, and Rosario Dawson was the narrator. So, and it's mostly just like a Bitcoin documentary. So yeah, and this is Fred's Bitcoin book. This is new as of today. I just put it up. I just got it. I loaned it to a friend, so I just got it back here. And then I had some other pictures up here of they look like they were pictures of me and a friend of mine for his rock album that I played on, right? But it was like an art rock album, and I thought they looked cool. But then everyone thought I was an actor, and so I was like, okay, I got to get rid of these things. They're fucking. They're off brand. I gotta make them go away. So anyway, but thank you. I appreciate I appreciate being noticed.
Yeah, no, and last thing I would say is congratulations on Stillcore. You guys are doing some great things for the ecosystem, and thanks for dragging J Cal kicking and screaming into the defensive space.
He's pretty excited actually. So I think he's I think we're going to see some. I don't think you've really seen him do what he's going to do for the ecosystem just yet. He's still sort of gearing up, but I think he's going to do some really great things for us. So
awesome.
So yeah, I'm happy to be working with him again. So, all right, gentlemen, thank you so much for being here. My name is Mark Jeffrey. This has been Hash Rate. We'll see you all next time.